The US is now in 37 trillion of debt, and it's increasing every single second. That's around $110,000 for every single American, including you. But here's the twist. We don't actually owe this money to who you think. In fact, the biggest holder of US debt will probably shock you. In this video, you will learn what national debt is, and I will expose who really owns America's debt. Alright, so let's begin here by answering the very important question, what is national debt? Or to be more precise, what is the US national debt? But this applies for, other countries' national debt too. But as I said, let's focus on the US. The US national debt is the total amount of money that the government owes. It's as simple as that. How much does the US government owe to others? And this debt builds up when government spends more than it collects. So just like, for me and you, if we spend more than our income or what we get, then we will have to enter into debt in order to, spend more than we can, essentially. So that is the only way to do that. And to borrow money, the US government sells something called treasury bonds and treasury bills. So this is how the US government issues debt. And in this video, we don't have time to dive super deep into bonds, but whether you are a trader or investor, or you just want to learn more about finance and economics, I highly recommend to dive deeper into bonds. And I do have a full guide on bonds right here on YouTube, so I will make sure to link that one up in the video card as well as the description. But here, as of 2025, as I showed you guys in the intro, the debt is now around 37 trillion, and that is completely insane. If you think about it, the largest companies in the US, I think recently Nvidia hit around 4 trillion. So the largest company in the US is 1/10 of this. Absolutely insane. But right now then, why does the national debt matter? Well, national debt is super important for many reasons. First of all, it of course helps to fund important programs and also emergencies. So think about things like, the COVID pandemic or even wars, and pretty much everything, anything the government needs money for, matters a lot here. And here, too much debt can lead to many things. It can, first of all, slow down future growth. Because when the US government has a lot of debt, it also means that it has to pay a lot of interest, right? This is the point too. It can lead to massive interest payments, and I think that recently the interest on the US debt has been around, 750, almost 700 billion per year. So to just, finance, to just pay its debt, its interest, it has to spend a lot. So it can lead to a bad cycle where we have to issue more debt in order to pay the old debt. And that is a bad spiral. So it basically puts a limit on the government's ability to potentially handle future crises. And also, if the debt situation gets even worse, it can scare investors and they can start to lose confidence in the US. And when this happens, it can get bad really quickly. But right, so now then, how does the national debt affect the US economy? Well, first of all, it can crowd out private investment. And what do I mean by this? Well, the government competes with other businesses for borrowing money, and this can lead to increased interest rates. So if other business they also need money, so they also issue bonds. And if the US government has to, sell a lot of bonds to finance itself, they might eventually need to raise the interest rates in order to attract more investors to get enough money. So it can lead to higher interest rates. And as I said, more borrowing means more demand for money, which means potentially higher rates. And when the rates of the bonds increase, your rates will increase as well. So think about the rate for mortgages, loans, credit cards, everything is affected. So it affects me, you, everyone. Also here, it leads to less flexibility. So what do I mean by this? Well, high debt limits how much the government can spend during future emergencies. And this one we have already mentioned briefly, but another very important factor is the risk of confidence loss. If investors doubt that the US can manage and pay back its debt, they may demand even higher interest rates or even pull back and stop buying debt. But alright, so now, and this is very key, how does the US national debt affect the global economy? I know that a lot of you guys are not from the US, but one thing I can say for certain is that the US economy affects the whole world a lot, not just a little. So it's very important. And here, around 25% of US debt is held by foreign investors, especially in Japan and China. And this might actually surprise you, because when many people think about the US debt, they think that the US owns money to other countries. Some people think that all of US debt is to other countries, but this is not true, and we will talk about that later on in this video. But here, US treasuries are seen as one of the safest investment in the world. At least historically, this has been the market that investors go to in uncertain times, when there are like wars or pandemics, when there are lots of uncertainty. This is often the #1 market where investors flee to. And here, the global financial system relies on US debt. If trust in it drops, world markets could be shaken a lot. We don't really know what happens if the world stops believing in US debt. That might be a really bad time. And we already saw a tiny bit of mistrust happening when Trump put on the Liberation Day tariffs. We started to see foreign investors selling tons of US debt. And by the way, guys, if you want to learn more about tariffs and how they work, they are very important, especially in today's economic climate. I do have a video about that, and I will make sure to link that video up in the video card and the description. But right, so now then, how does the national debt affect traders and investors? I know that most of you guys are mostly interested in trading, and we also have lots of investors here on the channel, and national debt is very relevant to both traders and investors because, well, first of all, bond yields rise when debt increases and buyers demand better returns. And higher yields then in turn will put pressure on the stock market. Because when traders and investors can get a higher yield or higher interest rate on their bonds, that means that they earn more money for bonds and they may shift some of their stock market portfolio into bonds, and that leads to the stock market potentially falling, and that can in turn lead to even more selling pressure and so on and so on. It can be a bad sort of cycle, a bad spiral. And here also debates around debt ceiling and even credit rating can often cause lots of market volatility. Volatility is basically how much up and down a market moves around its average. That is a very important concept to learn about, and luckily I do have a video about that as well. It will be in the video card and the description. Lastly here, traders monitor debt trends for clues about things like inflation, Fed policy, and market risk appetite. Once again, inflation, another important concept that I do have a video about if you want to dive deeper. But alright guys, so now we have finally come to the question many of you guys, the reason many of you guys clicked on this video is, who does the US actually owe its debt to? And as I mentioned earlier, and this might surprise you guys, and that is that the US owe around 40% of its debt to US investors and institutions. And this actually includes individuals like me and you. The US government owes a lot of money to individuals, but also, companies, even banks, different kinds of mutual funds, and so on and so on. But lots of the debt is owned to its own citizens. It also owns around 13% to the Federal Reserve, and also around 20% to things like Social Security, Medicare, and other kinds of US agencies. Lastly here, and this is what most people think about when they think about national debt, that is the foreign debt. And when it comes to this, it's actually only around 25%. This might surprise you. If you want to, let me know down in the comments below if you were surprised by this fact. But when it comes to which countries, we owe a lot to Japan, China, UK, basically other large economies. And China only owes around 3 to 4%. So here, important, most debt is owed to Americans and US institutions. And a common myth here is that China owes the US. You might have heard about this, but that is completely false. China holds less than 4% of the total debt. But right, so now I want to show you guys some resources you can use to track the US debt and many other things as well. And if you have been following my channel for a while, you know that I use TradingView for all my trading and technical analysis, but also for most of my economic analysis as well, and fundamental analysis. And to see all the debt of different countries, what you want to do is that you open up TradingView, you go to tradingview.com, you go to markets here, and you go down to economy and then all indicators. Then you move here to where it says government and press right here. And here you have multiple different government metrics, but here you can see it says government debt. So if you press right here, you can see the government debt. And by the way, guys, if you for some reason haven't gotten started with TradingView yet, I do have a special link. I will make sure to link that video in the description and top comment. And you can use that link to try TradingView Premium for free for 30 days. And if you later on decide that you want to upgrade, you will get a $15 bonus. But I do think all of this, I do think is available on the free plan. But yeah, you can still use that link if you then later on want to upgrade. But for example, here you can see a comparison between the debt in the US. The blue line here is the debt in the US. The sort of pink line here is the debt in the European Union. Then we have the United Kingdom, France, and so on and so on. You can scroll down here and see debt in basically any kind of country. And if we go back here to indicators, we go to government, you can see another very interesting metric here is the government debt to GDP. So how much debt do we have compared to the GDP? So compared to how much the country is making in total. And the United States is over 100%, around 124%. And the extreme example here is Japan, which has tons of debt, around 236% of its GDP. That is really, really bad. I can also just lastly mention, if you want to find the sort of visual I had in the beginning of the video, this is the usdebtclock.org. So you just enter usdebtclock.org and you will get to this point right here. You have tons of interesting metrics. This is a completely free site. So a big shout out to the makers of US Debt Clock. I think it's, pretty interesting, and lots of interesting metrics, like, down here you can see how much the dollar has lost its value compared to 1913. You have like a Doge clock right here. Very interesting tool. Feel free to play around with it. But right, so in order to make money in the long run, it's very important to dive deeper into the world of economics and finance. So if you have the time, I highly recommend to check out this playlist next.